Hey, it's Mark from Dynamite Stocks and Stock Pursuit. I made a couple of trades today. I found some pretty good setups here with this one short squeeze TUP, and I shorted or long puts on the NIO, the car company. So the TUP I found. I was actually just scrolling through Twitter and I found Tiffany's post on the Ortex data. The short interest was really high. It's like a 30% the float is short, and so it's over that sweet spot about 20% that I kind of like for a really good short squeeze. And the setup's there. It's like a long bull flag because a lot of people shorted it off of that supernova. It went supernova back in July, August, and supernova is just when the stock price accelerates higher and higher at a rate that it can't sustain in the long term, in the short term even, and they eventually just collapse. It's like a star, like a supernova star that expands and is collapsed on itself. So they always collapse when the volume gets exhausted. So the backside was really like a lot of people were shorting the backside. You can see, so it's got that consistent day after day moves there. Like especially in from September to October, it's just down straight, pretty much day after day. Just one green day at a time on a possible bounce, and then so it had a pop there back in October, and a lot of people reshorted it. I'm sure, because it had a lot of volume there those days, and then they're possibly going to get squeezed out here. If this thing goes, just to 260 or 260s, looks like about 255's a big level there. So we may have a little squeeze going here, and I think it probably is. Like I was saying in another video, when the markets are pretty weak, like they are, pretty red and choppy. One of the things that can be consistent in these short squeezes, obviously they have to be squeezing. You can't like hope on it, but when you got the VIX was down today, and then the Nasdaq's pretty break even. There's not a lot of sector rotation going into that I've seen, like going into a lot of sectors. So short squeezes are pretty good, and you find when these ones that have options can be really good. Like I bought the $2 strike November 3rd calls, and I bought those like early in the day, and they're $10 a contract, and I'm already up 130% in those calls. So this is a good one so far. And the other trade I made was the NIO, and I was looking at some of the. I mean, what kind of drew me to this one was just Tesla, and if you got companies like Tesla that are lowering their prices to meet demand, and they kind of built their business on as being a a higher price point car, say like luxury even. They the headwinds, the sentiment I see here in the car market, it's not really good. And you've got, I just saw that those statements from the CFO of Aaron's, people are cutting back on, large purchases like furniture and appliances, like expensive stuff. So, if they're cutting back on that, they're probably not going to be buying new cars too. So So then that kind of led me to look at some other car companies. Like I was looking at Ford and stuff, and I mean, I could have even gone with the Ford puts, but just to kind of recap this one, I put on the NIO $7 strike puts for November 10th today, and those are slightly down. But the setup I saw on that one was this setup I've been seeing a lot lately. It's just this pretty quick triangle where it does, a lot of days, a few days of consolidation, and then so I did 1, 2, 3, 4, 5 days basically of consolidation, and then my setup, the setup here is it's gonna break down because it's one of these descending triangles that with the chart that's been in a downtrend for a long time. So you can kind of take it out, and it goes back to August, when the downtrend started. So this one, yeah, it's really bearish. I mean, it's got these levels here from May and June, but my play here is the sector, the weakness in the autos, and a lot of looks like even maybe staples. So, but anyway, it's just like a sector weakness, and then this triangle breakdown is what I'm looking for. What these have been playing out pretty good too, so NIO's not really the best known brand, but so I think that's going to be a good one. And I was looking at the other car companies too, like Ford. Yeah, they just got Ford just got annihilated on earnings, so that was kind of playing into my thinking. Ford was down really big there, like over 10% looks like on their earnings report, and it's still downtrending. It's down 2 days off of that. So it's another gap down. That's kind of why I like this gap down scan that I have, and I have it customized. Like it's not just gap downs, it's I've got some custom filters on it. Especially to look at share price and even volume. But this one, Ford broke down a major level there. We can see it, when you draw it out and you zoom out. It's kind of a multi-year breakdown, because those lows were from December last year too. Yeah, wow. Well, look at this. Yeah, it goes back to June and July of 2022. So that's pretty bearish. And by the looks of it, it looks like this is going to hold. That this gap down was pretty significant, and it's still going down. Usually the gap downs, if they're not gonna hold, they'll print like a hammer on the day, or they'll just like quickly reverse, a bullish engulfing candle, but not today, or not this week. So yeah, that's pretty significant. Looks like the lows were, like high tens, $10 a share, 10.90 there, and 11s on that one. So yeah, we're definitely below multi-year lows here, and we're going back to, it's really threatening 2021 2020 lows even, you know. So that may even be I mean, I think it's worth a sector look, you know, like, and we've seen these airline stocks get killed too, and some of these sectors are just getting annihilated. You know, it's just like indiscriminate selling on a lot of stocks. GM's not as bad. I think Hyundai even had a bad quarter. If I'm thinking about the Hyundai quarter, it's like Toyota's not as bad. Yeah. So anyway, yeah, that's kind of what I was thinking about with that trade, and you know, I've got some time. I think those, yeah, I got like over a week or so, so I think we'll get some more lows on NIO, and it looks like it's gonna go the way of Ford, you know. So I mean, even Tesla. Well, yeah, like what I was saying was Tesla kind of led me to those because you know the Tesla earnings call was really bad, and I didn't listen to it, but they said like um, Elon Musk was pretty down, and you know Tesla's technically you know it's breaking down technically, so you know it's pretty convincingly holding that below that low there from August, you know, and you know my thoughts on Tesla is, you know, it's like I was never really that interested in it, and you know, as an investment, you know, post, you know, like 2015 or so, you know, like because they were struggling for a long time, and then the kind of the when you even if you're buying a great brand, you know, I mean Tesla's a great brand, and you know they're great cars, but the uh, the long term economics of automobile companies are not good. You know, if you just look at history, you know, like I like to look at history. The history of those really competitive industries like cars and you know, well, especially airlines too. Like I think Warren Buffett even put cars in the same category as airlines, like stuff that he doesn't really buy. I mean, you never seen Warren Buffett buy a car company, or you know, it's kind of on his do not touch list for reasons that the competitive nature and you know, it's all. I mean, I guess they all have different features, but you know, it's like it's basically like a commodity type business, you know, where you know it's all about pricing and it's just a tough business. It's really tough. And there's been a lot of companies like even you know GM and I mean all the American car companies have basically been bankrupt or near bankruptcy at some point, many times over the history, and like the way it is, yeah, there's like they have their they have their day, they have their decade even, you know, and then they just kind of you know the new cars come along and you know they just lose to the economics of it, you know, having a you know lower margins over time, and you know it's just not really good business to own. So I think I kind of feel bad for the people that you know think Tesla's going to be different than all the other car companies in history. That you know there've been a lot of breakthroughs with cars. You know, like you know I'm not like a car history expert, but I mean the American cars has some really good stuff coming out. You know, in the 50s and 60s and 70s. You know, then they lost to Japan. You know, and the Japanese came along and just made better cars, and you know, so there's always going to be a better car out there eventually at some point, and there's so many companies competing against each other. It's I'd say there's no moat, really. Like, I mean, Tesla has a brand. Tesla used to have a brand moat. They could, charge high prices and hit demand and, well, kind of, but 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 yeah, that's just the way it is. Say you have, it's like the airlines. Like at some point, every airline has a great start, and then they they fall into the nature of commodity type pricing business, where the lower price is necessary. Unless you're, I mean, of course you can have like, there are brands that price high and they do well, like the luxury car brands, they maintain their price points that are high. But anyway, like I was ranting too long on that. So, but those are pretty much the only those are the main things I just want to talk about. Those two trades I made on the video, and like I still think we're due a pretty good bounce here. Maybe even like a week where it bounces. Like the XHB is green again, and it's got some momentum here. It broke that downtrend momentum, and I've been looking at the VNO. Like I'm looking for a spot to buy some puts in this one because this is on my real estate short list. So they just had earnings and the reaction was bad. So, and yeah, I was gonna say in the other video, like the other day yesterday when everything else was pretty much green, the ABR was red, and VLY too, and ABR just had earnings too, and the stocks reacted negatively. So the reaction is always more important than the numbers. But I mean, you can Google over the numbers all night long or all day long, but to me, like as a short-term trader, and it matters more what the reaction is. But of course, I do invest long-term, but I trade too. So, and oh yeah, the other ones I added, I found. Yeah, I was trying to find some long setups yesterday, and this LXRX, it's really trying to bottom here. You see the long-term chart, it does have a good history of some spikes, it can spike, and their drugs were good, like they were in some good categories. See, it even spiked a lot in 2021, which is interesting, but I believe they have like a pretty good pipeline with phase 2 and phase 3, but the categories were good. It was like I think it was like diabetes or pain meds, like I think it was neuropathic pain, or like pain meds. So I just kind of see I can see a bottom going here because it's pretty much based out there, and it looks like a really long kind of bull flag. But I can see this kind of developing here. It's got an uptrend going. I guess I was kind of thinking of Tesla because I was listening to a Twitter Spaces on. They're just talking about Tesla and like strategic moves for Tesla. So that's why I was rambling about it. But this one, yeah, it's a setup there. On a breakout, I see like and it has options too, so that's why it's in my wheelhouse here. It's got the the January, I believe it was the January or February 150 strikes were pretty liquid and affordable. I'm just pulling that up real quick. So we got it's got 250 strikes until January. So well, it looks like the April's actually the April's had the most open interest on my platform here. So the Januaries were, let's see, the Januaries are the 150 for basically $20 a contract. And that's a pretty good spread for lesser liquid option. I mean, the key is that they just keep trading really. Like I buy a lot of spreads where they're pretty wide like this, and they always end up pretty good. If the stock moves, they do well. The volume doesn't really dry up. If it's something what I stay away from is like something like that where it's like $300 and $20, that kind of spread, or 160 and 20. So the 150s in January pretty good, and these Aprils are even more liquid next year. The 150 for April, and that's gonna be that's a really good good price to just pick up per contract, because the possibility this thing goes like $2 is pretty good to me with this setup here. Excuse me. So that looks pretty good. And I think that was about all I want to talk about. Like the Redfin came through. Looks like Redfin came close to that. I think it actually hit that level, that downtrend level, and looks like it's not even going to get close to it because it rejected today on good volume, even with the XHB being up. So I really like this. I really like this trade still, and I've got the 11, 17, $5 strikes, and those are up 160% now. Oh yeah, and I also bought because I did do a lot of trading today. I also bought the well, since I'm on that, like I was keep looking at Rocket too, because they're gonna go down too with the ship. So I'm just gonna wait for a breakdown on Rocket, but I'm watching that one too for housing related. And I noticed the UNG, or the natural gas, broke out today. It looks like it opened up, gapped up today too. Or the session started tonight. So I bought some undersized UNG calls, the $8 strike for this month, and those are up 25%. And I put stop losses on for about 40% loss. So I found with options, with my USO options, when I traded oil a lot, the 50% stop out was pretty good, because the average gain was always like over 100. So the win loss ratio worked out with that stop out level. I mean, I actually, like, a lot of times I would even be even bigger stop out, but I'm gonna play it safe on some of these more speculative ones, like I mean, natural gas is a big breakout here, so it's just something I want to participate in because I've been watching it for months now. It's been consolidating and running higher. It's been going higher since summer. And the seasonality of it is, I looked at a bunch of charts over the years, and you can say this and that about the demand and supply, but when it makes runs, it's always in the fall, in like October, November, and some things are just like that. It's kind of seasonal, like and it's probably based on the weather, of course, and the a lot of factors in the weather and stuff, but I like to buy breakouts on commodities, so this is a good trade I'm in. And I got burned on it. I got burned on it a lot of times, trying to long, but uh, the idea is you catch like an outlier move here. I think something's going on with it. I mean, I just let the technicals kind of guide me on it. So that's what I did today for my trades, and I didn't really run any. I haven't run any scans. Like I'm kind of happy with my positions now. Like unless there's some like perfect triangle out there or something, like I'm not looking to put on any more positions. I'm still watching Bitcoin. Like Bitcoin's breaking out. Looks like it's trying to break out still. Yeah, that looks like a flag to me. And this isn't Bitcoin, but it's like the ETF. But yeah, I'll just leave it at that, and I'll catch you next time.